With comparisons coming in from the 2014 to 2017 market cycle in Bitcoin, Ethereum is now thought to get that good old free ride to $20,000 based off of what I suspect is going around in the old crypto community, a fractal, a good old fractal. Anyways, we're going to go over some data today to see if that's even relevant and perhaps judge some higher targets or maybe lower targets as well for Ethereum. And with that said, welcome back to EllioTrades channel. I'm host Krown again today. And we got some good old technical analysis. I'm still coming to you from Dubai, so unfortunately I'm away from my usual battle station here, but I think we got just enough to get this video out and about. Actually, just by the way, Dubai, phenomenal city, absolutely blown away by this city. Very, 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 very impressive. I really do love it here. But that's not why you're here. So I will get off that topic and let's get into it right now. All right, so first things first, where is this coming from? Well, the good old fractal, right? And in a fractal relationship, theoretically speaking, the percentage gains from cycle to cycle should be, well, more or less consistent. So let's just play around with numbers here as we can quickly verify if this is true or not. And we can see right here, Bitcoin in 2014 to 2015 bottomed out at about $220 or so. Not a bad buying place. And a few years later, in December 2017, based off of the CME debut for Bitcoin futures, topped out just under $20,000 here on Bitstamp. So we can just effectively say $20,000. With that in mind, we are going to take a nice little percentage measurement tool. And as you can see, that did about, from bottom to top, 8,659%. Interesting. Okay, well, let's actually go over to Ethereum and plot that on there and see if that were to hold true, or where that would even put us, sorry. And what can we do over here? Well, obviously Ethereum, what would be akin to your 2014 to 2015 cycle, would be right here. And of course, well, it does actually bear some resemblances to the price structure that we did see in Bitcoin during the 2014 to 2015 structure. However, let's just play around with numbers and add on a good old about 8,600%. And where does that take us? Rising, and we are now there. Just around, let's say, 11 to 11.5 thousand US dollars. Not a bad number, actually. However, again, I do not believe that, one, these relationships are consistent, and two, that they are, well, really relevant to begin with. And perhaps this might be to your liking as well, because what we're going to discover here, or what we're going to see in real time, is that there's actually some more interesting relationships going on between these two pairs. So first things first, we are going to go over the Fibonacci extension relationship, and we're going to start back on over here with Bitcoin, of course. Let me just readjust my charts. And what I'm going to do is I'm going to pull a Fibonacci extension from the 2014 to 2015 cycle, and we're going to put this on log scale, of course, for the fib that is, and let's just see where we topped out at. Well, that would be the 2.618 Fibonacci extension right here, just around $20,000. Why is this relevant? Fibonacci extensions, why do I like them, or why do I like fibs in general? Well, it is because bots and algos are typically programmed to respect these major numbers here. And in this case, when you do get into these sort of blue sky breakouts, those who are running the markets, typically speaking. I mean, it is no, I guess, secret that more than, I believe, 90% of trading nowadays is done by bots and algos. So with that in mind, let's do the same thing for Ethereum. So I'll take this back off. And let's do the grand old reveal as well. Remember, the number that it topped out at was the 2.618 Fibonacci extension. And as you can see right here, we've done the same thing, pulling it from the high to low. And where is our 2.618? At a rather large number, you might say, just below $47,000 to be fair. Now, I want to be very directly clear. Am I saying that Ethereum is going to get to $47,000 on this cycle? No. In fact, I think that that would be quite the stretch, personally speaking. I think that that is very ballsy to call more than a 10x move, even in cryptocurrency land. But to be fair, if we were looking at this as a fractal relationship, that is the technical target that we would be looking at actually. So if you are running with that assumption, which there are actually decent reasons to believe so, that would be relevant. Now, with that said, I want to go over a few things here that can be a little bit more reasonable, and this is going to be a little bit more relatable to what I would call the medium term for the higher term timeframes, being the weekly. So what sort of a time frame are we looking at this at? Probably within the next month to 3 months, if I had to guess. I would really say probably more like 1.5 months in this case. And what are we going to do here? Well, we're going to use one of my favorite indicators. That is going to be my volatility indicator, the BBWP. Shout out to Mr. Caretaker for this one. And as you can see over here, we have all sorts of very similar reads as I pull up my tools for some vertical lines, just marking off kind of where we're at right now when we get to very, very low volatility. So of course, if you have not been following up on these videos, I should probably explain what volatility is. It is the dispersion of returns. And this particular indicator is the Bollinger Band width, which is based off of the Bollinger Band's, well, width, not actual BBWs. And then we rank it into a percentile statistical format. And as you can see right here, we are currently coming off of a very low read. And low reads imply that we have gone through a long contraction phase. What is contraction? Consolidation. What is consolidation? Essentially, consolidation in Wyckoff terms is building up a very big cause in layman's terms. And in terms of what happens after that, in layman's terms, comes the effect. So a longer consolidation leads into a bigger effect, typically speaking. That is why when you see Bitcoin go sideways in a range for years at a time in the past, you see absolutely massive, catastrophic, in a good way, breakouts to the upside. Now, of course, these can come to the downside as well, but in this case, well, we've been just so blessed by Bull Jesus with some upside movements. Anyways, what do we see right here? We see several times in the past where we have gotten within these same sort of reads. And let's just see what we'd be looking at within a particular sort of time frame as we can reference these. Okay, so first one pops up. Let me just adjust over here. Pops up over here. And you can see within the next, looks like the next 2 months in this case, from basically middle of December to middle of February, Bitcoin goes for 126% gainer. Not bad. But you also notice that is the least impressive of these results that you will find. Let's go over the next one right here, June of 2020. And we see a pretty much immediate rise over the next, I need to count my months here. I'm American, so I don't know these things, but July, August, September. Yeah, 3 months. So 3 months and 100 and looks like actually 120% again. Okay, I do stand corrected. About the same between those two. Okay, here we get into the fun ones. Starting in November of 2020, we start right here. And what happens after that? Over the next month, I mean, almost an immediate 62%, but things do not stop there. This is a continuous rally that really doesn't go through any major consolidation until over here in February of the next year. So that would be November, December, January, February. So 3 months again, this one giving 406.49%. Not bad. Okay, what about the next one right here before the grand old blow off that we've seen thus far in this cycle? This one starting in about middle of March, of course. And where do we find ourselves? Well, again, actually another 225% gainer right there. Rather consistent on that one, to be fair. Anyways, with that in mind, that one happening a little bit faster, as you can see, from March to May. And what do we have again right here? We have a pretty damn low read, dare I say. We are even accompanied by 5-day hidden bullish divergence. And we're actually just fleshy getting back into the bullish control zone as well on the 5-day RSI, which all of these prior signals were very consistent with as well. And of course, before we get excited here, we will talk about invalidations as well. Remember, trading is a statistical game. There is no 100% guarantee of anything, just statistics and probabilities that you can use to generate an edge. And what do we see right here? Well, Oh, sorry, I haven't even done it. Here we go. Let me lower it down just in case. And let me put on my drawing tools. And let's just keep in mind where some of those bigger fibs were. We got the 2 spot right there at 10,500, which actually was kind of in line with that 9,000% gainer or so. And let's add on about 225 to our current number here at just under 4,000. That would put Ethereum around $13,000, which would be, I would say, within the realm of that. Could be a quick book up, actually close right around there. That is all good. The thing is, though, I will go out on a limb here and say this. If you do want a little bit more moon boy-ishness, I suppose, which I am usually a bit averse to, unless it's supported by data, of course. And what would that be? Well, very rarely. In fact, I can never, ever, in my experience, remember a time where I've seen a market cycle top at the 2 spot extension. Where I typically see them are the 2 spot 414 and the 2 spot 618. And in this case right here, well, these would be some rather impressive numbers, of course. So with that in mind, let's go over the more short term here now. So now we're talking about perhaps the next few weeks, actually. I'd say no more than a month, and probably more like within the next week or two, if I had to guess. And what do we have going on right here? Let's actually go back to the 5-day. It shows things rather easily here. We do have a lovely bullish reaccumulation formation. What does that essentially mean? It means that, well, inventory has been reaccumulated. How do you know that? Well, generally speaking, it's an uptrend. And again, do not let these terms confuse you. Do not let them scare you. There's actually a psychological, or sorry, not a psychological, there's a very tangible reason for this. What do you see going on right here? You see an uptrend. What does an uptrend imply? Within the context of an ascending triangle, well, you're getting higher lows. So here's your low, here's your next low. It's a higher low, obviously. You're getting the same highs. So what does that say? Buyers are getting more aggressive and sellers are just defending the same point. They are not getting more aggressive. And in fact, they are losing their power over time. And you can see that by the 5-day RSI right here, as we do have that hidden bullish evidence in this case. And that implies that bears were using more force than the last down that we saw over here, but got obviously less far to the downside. In this case, we look at this, or at least I look at this, as bulls gaining momentum. And in this case, you're also gaining momentum around your par all-time high. Typically a good thing. Volatility also turning up, and momentum oscillators also turning up. That, in my opinion, or in my experience, is a trinity. Again, not 100% guaranteed to work out, but typically a very nice setup. Where would the invalidation point on this whole analysis be? Very simply put, if I were to look for a nice drive with the targeted region all the way back down to about 24 to 2,500, that would be initiated off of a weekly or even a 5-day in this case closure below 3,400 US dollars. If we were looking at a daily, could we do the same thing? Yes, a daily closure, let's say below 3,350 would do it for me. And then yes, I would be looking for a drive into about the mid 2000s, maybe upper 2000s, and then come back to it after that. I would not necessarily get inherently bearish after that. As you can see right here, we are once again knocking on the top side of this formation. And I would go as far as saying that this is very likely to break out to the upside in the maybe even this week, probably next week if I had to guess, as we see all higher term timeframes trending, and the monthly is looking beautiful as it does pop its head above the topside Bollinger Band yet again. But I'll save that for another video. And with that said, I want to once again thank you for the great support on this channel. It's been really kind and blown away. And some of you guys have some hilarious and funny comments as well, which gives me a good laugh from time to time. So I've really enjoyed being a part of the community here, and I want to say thank you for that. So with that said, take care, and I will see you in the next one.